Interest rates are staying the same for now, and they may not be for the reasons why you think. This dramatically affects the people we work with because we have a platform that helps people raise tens of millions of dollars through a tried and proven system where several people have gotten tens of millions of dollars raised. And in researching the All In podcast, what they said about rates, I can definitively tell you some of the reasons as to why the rates in the US are staying the same and why they're expected to drop within the next coming months. And some of the things that the billionaires on the All In podcast said was when you look at the reasons why rates go down and some of the market sentiment, they said that the market sentiment is pretty somewhat negative, but negative market sentiment is often a lagging indicator. That just means that if something bad happens that causes fear in the market and a sell-off of stocks or sell-off of equity, that could mean that the sell-off has been started by a negative, by an action that people perceive as negative, and that negativity spreads because stocks and markets go down, then the sentiment then spreads and then is negative. It takes time for the negativity to spread. So some people argue that it's a bit of a lagging indicator. So sometimes the rates may be affected by a combination of the current sentiments and actual current reality. So sometimes what we see as a sentiment of what's going on may be something that has happened in the past compared to what is happening right now and what Jerome Powell, the chair at the Fed, may do. In a nutshell, people feel bad about the market. It may be a lagging indicator of something that has happened months ago. And sometimes things change sometimes things change quicker than how we feel. With that being said, if the market is better than we think, that may be a reason why they haven't lowered interest rates. But if the market is actually as bad, that's one theory. If the market is actually as bad as people perceive, according to the All In podcast and some of the hosts there, one thing is to look at a dangerous thing. So really, some people argue that the rates should go down right now. The reason why the rates should have gone down right now, but they didn't, is because the amounts of consumer credit and the revenue that consumer credit companies are making is going up. And in the amounts of money that the Credit Acceptance Corporation is making is going up as well. So the gap between the Credit Acceptance Corporation, this is a company that does deals with people with bad credit, and the amount of money that Capital One is making, and so this is a company that gives out credit cards. Essentially, when the gap increases too much, then some people may argue that it's a leading indicator of future consumer credit problems. So soon, people will have problems paying their mortgage, paying their car loans, paying their bills, and people will start defaulting on things. So some people may argue that because people know that this is a leading indicator of hard times about to come in the consumer markets, the rates should go down. But the thing preventing Jerome Powell to reduce the rates may have to do with Trump wanting to fire him, some people may say. So it could have to do with Trump having to fire him. It could have to do with them having to wait and see how the effects of tariffs will affect things. So tariffs were a very controversial and confusing thing, and it caused a lot of chaos in the market. Chamath, one of the billionaires on the podcast, was boldly saying that the reason why they haven't cut it has to do with political reasons, because in his opinion, all the leading indicators of a future credit issue and a need for the rates to drop, because he can just see a tidal wave of tons of people defaulting on their credit card, mortgage, and car loan payments. The reason has to be a political reason, not a financial reason, because he's extremely bold in his analysis about it just making sense to drop the rates to protect the consumers from getting dinged. And it could definitely have something to do with tariffs as well, but the only specific thing was Trump boldly just saying, I want to fire Jerome Powell, I want to get rid of him somehow. So Jerome may also be using the drop in rates as a bargaining chip, because if he lowers rates now and makes Trump happy, then he are in trouble later. So probably as like a last ditch efforts to keep his power or power base or job security, maybe he's delaying dropping the rates to the last possible minute. So those are some ideas and some thoughts, but ultimately it's really hard to know because markets are chaotic, things are complex, and the data is still coming in to see how many people are employed, to see, how many people are defaulting on their rates. Currently, based on the data, the people are still paying their mortgages on time. It's just that consumers are racking up more debts, and they are paying for more credit cards. And whenever people pay for more credit cards and it goes up like exponentially, then it's about to be a crunch. But with this, head to raises.com, book a call if you want to learn how you can take advantage of this to grow your business, to own a business, to raise capital, because knowing what the rates are super important to know how to position yourself if you want to get ready to raise money, because it's all about debts and equity. And if you master the rates, master the timing, you master refinancing, master acquiring deals with other people's money. And so with this, we'll see you in the next